Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining us for this segment, we have Jamie Sullivan, Chief Financial Officer at True Independence, to discuss the basics of personal finance in the American education system and selecting an advisor. Jamie, it's great to have you with us. Welcome back to Trade Talks.
Wonderful. Thank you. It's wonderful to be here.
What are some of the areas you are most surprised by people's lack of financial education, and how can we increase our expertise there?
Yes, I mean, that's a pretty broad question because I think our population is quite broad, right? And there's a lot of different classes of folks, from ultra high net worth to those living paycheck to paycheck. But I think, when I think about answering this, it comes down to, I'm still really surprised that people, aren't putting the time and effort into retirement planning early on, not kind of missing the point of the time value of money and the compounding that, impacts that has. I think I'm always surprised at people, focusing on the shiny things or the wrong things first. Meaning, they have a kid and they want to put money in a 529, but yet they're not putting any money in their 401k, right? So things of that nature where they're trying to do something good, but it's just not fitting into the grand scheme of things really well. And I think, the other thing is just really knowing that as you go through life changes and big life events, marriage, kids, aging, parents or families, all of those different life stages bring different considerations. And I think it's sometimes intimidating, but I guess I'm just surprised that, people don't really know, you know what I mean? Like what to do when.
It's so interesting, Jamie, because we're on day 28 of Financial Literacy Month. And one consistent theme that I've been getting from folks such as yourself and other advisors and strategists is how surprised they are that people aren't taking advantages, and simply because they don't understand what work programs such as 401ks are available to them. So what are some steps that can be taken in our educational system to increase financial literacy earlier in people's lives?
Absolutely. I mean, I think overwhelmingly people want to see some requirements there, right? Somebody shouldn't be graduating without some basic financial literacy, financial planning course. But I think it's more than that, right? Like, I don't want just a senior signing off on a course just to get a diploma. I think if we really want to invest in our economy, it starts with educating really early on, making it fun, making it a part of the elementary school experience all the way through middle school and high school. I think in my head, in a lot of, I don't think I'm the only one in this class, but it would be amazing to see, requirements throughout schooling, but some really advanced, fun ways to expand upon that. In my head, all I'm thinking is how amazing it would have been if I was in high school and had an entrepreneurial type class, right? Where I could have had my own little business, with the backing of a teacher and advisor at that age, instead of just having to figure it all out in my 20s, right? So I think, to me, it's requirements, but it's really the kind of the tenured education experience. And I don't think it all has to be on the education system. That's a major component, right? Kids spend a lot of their lives there, but I think it also comes down to, the home and the families, right? Making sure that we're also giving the tools to parents, caregivers that might be in that financially illiterate class, but they want to be good models. So I think it's a combination of both at the home and in the education system.
When a person is selecting a financial advisor, what should they use as criteria to inform their decision?
Yeah, I think it all starts, one, knowing yourself. Where am I at in my life? Right? Am I in my 50s nearing retirement, or am I in my 20s, 30s in a very different life situation? So one, knowing yourself. From there, it comes down to, I think, more of the brass tacks considerations, right? Is this person, do they have the expertise, the credentials, the knowledge of what I'm looking for? Are they putting themselves out there as a fiduciary? Right? Those are really important considerations. The other is the breadth of services the advisor is offering. right? Some are more investment management, money management focused, where others are really more holistic financial planners. So understanding what they're offering. And also, a lot of advisors, they specialize in specific sectors of clients, doctors, professional athletes, millennials, women, right? So I think, you get through those parts of your checkmark questionnaire. From there, it comes down to the relationship, right? Can you trust this person? Is there some chemistry there where you want to reveal, right, all of your sensitive, emotions, all of your financial information, to this person so that they can help you grow and prosper. So, yeah, I hope that answers that question.
And let's talk about advisors for a moment. Financial Literacy Month is a call to action for people as well as their financial advisors. What are the most important pieces of information advisors need to share with their clients to increase their financial literacy?
Yeah, well, I think one, it all comes down to knowing your client and almost reiterating what the clients shared with you. I think sometimes, the clients don't know what to tell their advisor. So I think one, it's important for the advisor to make sure they're asking those right questions, right? Sometimes it's more than just knowing the balance sheet of a person. It's about knowing, do they have a family member that's a dependent, right? Do they have aging parents that they're going to have to think about providing for? So I think reiterating the know your client basics, reaffirming those life goals of your client. That's a really important thing. And that's where those regular check-ins are really important. From there, I think this is really where the advisors excel. And it's all the other considerations to make those goals and needs met throughout the life stages. Because whenever you're in your 20s, you may not have kids or a spouse, you might not be thinking about life insurance or disability insurance or long-term care insurance, right? But as you age and get older, those things really come into play. So I think it's up to the advisor, to make sure that they're bringing in all of those considerations, and also educating, right, along the whole time. That's part of it. It's like, yes, they're there to help advise and manage your money a little bit, but ultimately it's making sure you understand the why and the things that you're not thinking about.
Let's learn more about the advisor practice here. True Independence helps financial advisors go independent. What are some of the economics behind this process that advisors should be aware of?
Yes. So this is where I live and breathe. I love this question. I think ultimately it starts with what independence model you want, right? There are some ranges there. There's full independent RIA versus being more of a tuck-in, which I kind of deem as more of a plug and play model. And both of those scenarios, if they're debating on independence, let's assume that there's going to be a separate business entity, which, in and of itself is its own, consideration on starting up a whole new business, let alone starting up a business that's regulated, right, as an investment advisor firm. But in terms of the hard costs, startup wise, you're talking just like any other business, marketing, legal, office space, right? Those are kind of knowns that you want to budget and be aware of. There are some custodians are out there to help offset some of those costs, but I wouldn't factor that in necessarily. I think it's important to know the costs going in. The other is just the ongoing business costs, and really, understanding that. It's also thinking about 3 to 6 months of those, because whenever the advisors are going through that transition, leaving their old firm to a new one, there's going to be a lull, right? A lag in assets coming over, which translates to revenue coming over. So when you're thinking about the economics of going, right, in that transition period, it's startup cost, and then about 3 to 6 months of those operating expenses, just to make sure that you've got enough lending or self-funded capital, in the bank to be able to support that. Because I think it's a very stressful time, right, when you're transitioning. And so I think the last thing you want to be thinking about is, oh my God, how am I going to pay my people? It's like, have some money set aside, or let's work with a lending partner to have that line of credit available, so that you can focus on procuring all of those advisor client relationships, training your staff, in all of these new systems, so that it goes really swimmingly. But it's always a bit of it's a frazzled time period, right? And so I think the other factor is or not even factor, but consideration that's not really economics is, the advisor cannot do it all. Right. I mean, a successful transition is dependent on the people they're bringing over and the people that they are partnering with. Right. And that's where, True Independence obviously fits into that. But there are, even if they're not using a full service provider like us, they're probably going to have a multitude of other service providers to help them make this all move. And so, there's a lot of considerations. The other big one, though, is time and the commitment, right? There's a lot of decisions that have to be made. There's a lot of planning that has to be made. And I think the advisors just need to know going in that they've got to prepare for that, right? There's definitely some money, some dollar signs attached, but the time and the impacts that might have on their life. That's really the biggest, because if they know, if they're putting the time in, it's going to help overall.
Right.
All
right. Well, yeah, certainly the biggest variable, like anything in life, isn't it, Jamie? Thank you so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Awesome. Thank you.